Good morning, guys. It's Armand from Cool Trading Tools here. So let's get our morning pre-market analysis started. So we're going to go over a few things. We're going to go over the NASDAQ. We're going to go over the semiconductors and a couple stocks watching today for day trading opportunities and one swing trade. So let's start here with yesterday. The NASDAQ and the semiconductor ETF, SMH, both kind of held short-term supports, kind of stick-saved right here. 50 SMA being held by SMH, QQQ holding this daily pivot level here. Kind of, now they're both gapping up, which is not my favorite from a day trading perspective. It makes things a little bit more difficult, in my opinion. So we'll see. And I don't see a ton of opportunities going into the day, but we'll just kind of break down what does this mean. So for the NASDAQ, it gives us kind of a clear level now, this 700 to like 703 area that we want to see. If you're a bull, you want to see that hold now. And we'll see how this kind of saves the way the weekly candle looks. If this breaks down and kind of forms a candle, down here by the end of the week, it's today and tomorrow left. That'll kind of indicate, are we getting a weekly bull flag on the NASDAQ, or are we, going to break down for some, longer term consolidation, maybe going into the end of the summer here. So long story short, we have this key level to watch here, followed by, if it breaks here, I think, we're definitely testing the support. So we can keep an eye on that. Not much to do ahead of that right here. So like same thing with semiconductors, gapping up now here, and weekly chart, let's take a look. Kind of same scenario there. So not much to do with the ETFs. I've been trading Soxel and a lot lately. Now with the save, I think volatility might die out a little bit. So makes the watch list. You need to go kind of find some names a little bit better now, because I think that now that we've maybe had this save, I normally only trade 3x and 2x ETFs like Soxel or TQQQ. The volatility picks up on like down periods. When things are rising, it's not normally as hot. So maybe moving on to some other names here for the time being with that. Yeah, but let's go into here. So one of the semiconductors here that's held up really well is this Penguin Solutions. It has a really great look to it, breaking out to all-time highs here. It's got a few things going for it. It held up really well during this consolidation for the semiconductors, held up better than all the other ones. It has recent earnings, like 2 days ago, so it's got something fundamental driving it. And it's breaking out to all-time highs, clean look yesterday. So it's got one negative, though. For me personally, I've never traded it before. So it also has great range. I think what we have, $9 ATR and $8 stock. So that's whatever. That's over 10%. It's like 13% range of the ATR percentage, which is great range. I've never traded before, though, and sometimes it looked like it traded pretty well yesterday, respected the styles that I like to trade. We have opening range break here, push, pull back to VWAP, bounce. So, pretty respectable to the way I would like to trade. But it's something I'm usually cautious about. It works, I think, today because we're gapping up. We've been in a little bit of a bearish scenario. So it wouldn't surprise me now if we gap up here. We get a little profit taking. It's day 3, I guess, of this bounce getting started. So now SMH is going to be up about 7% going into this. It wouldn't be surprising if we get a little profit taking into this gap. And that would actually work well for this because I don't love to chase it. I would take 2 setups on this. An opening range break, but the best setup would actually be if we come back here and test the green to red spot. Say the semiconductor ETF pulls, on that profit taking theory. It kind of consolidates around here, fails to break down to go red, and then we can get long off that. I think that's the ideal setup for this Penguin Solutions here. I would take an ORB on it. But like I said, with the market's been weak lately, and the semiconductor and the NASDAQ gapping up, I wouldn't want to be buying too really off the open just because of the weakness. It wouldn't surprise me if we get a little morning weakness on that. So That would be a long setup for the day. Ideally, we sell off in the morning, failed green to red, and we get long off that. SpaceX worked out great yesterday. Opening range breakdown low. I was loaded here, and I had to stop back out. It came all the way back up, but I was able to re-grab it. I think right here when we went red, I re-grabbed it, and stop was above here and held. It wasn't super clean. It actually was clean at the end of the day, but it had some large retracements. But I was able to hold it for a good trade, a pretty big bounce at the end of the day. I think the market was pretty strong, so that might have, added to that. I still think, though, we can look at this green to red spot right here, look to get a short on the green to red, see do we flush and break down. I still think that, it's like an all-time high breakout on this penguin. There's no resistance above. All-time high breakouts can be powerful. Same thing with this. All-time low break are not as powerful as all-time high break. It's just that this is such a hype stock that there's no support, and the range is still there. A little bit of decrease in range yesterday, something I talked about. Does the range decrease is my bigger concern than am I wrong directionally. Slight decrease, but still giving enough range to day trade. I'm still looking for this to be short. If we broke it, but I think at the only peak yesterday, we were only down like 2.7%. So it wasn't like, crazy, compared to like these days, you're down 15%, you're up. So can we break and get like a 10% down day? That's kind of what we'd love to see. I'm not sure we're going to get that. The range might die out, but it's still there. And until totally proven otherwise, I will probably still be looking at this as a short here on a green to red, and then maybe cover some into this area initially, just because that bounce was pretty strong. Green to red, cover some for $1 into the momentum. And then I would look to see, can we break the low of yesterday? And hopefully that gives another add opportunity on that. So that would be my setup to keep shorting that. So there's not a ton of day trade opportunities. My least favorite days to day trade are gap ups. They just tend to they can suck not always, they can suck the volatility out of the market a little bit. So next setup here, though, is this bull, which I'm going to give a few reasons for it. First off, it's not the best swing trading environment, and I think a lot of people know that. But I do like this setup. I've been watching bull and hood with the whole narrative. I think there is a driver behind that with retail investors, and these are some of for the newer traders. Like, they're not the traditional Morgan Stanley, Ameritrade, Charles Schwab. Newer traders in the last 10 years love Webull and Robinhood, and therefore with the PDT rule being cut, maybe more active newer traders coming in, I think these companies stand to benefit from this. So what's the idea here? This, I would look for almost like a laggard swing. Hood has already broken out of its base here, right? And Hood's broken out of its base here. And I think that there's a chance that bull has a little bit of a laggard play to that. And the thing is, we got a tight range setup. So we break here, 730 area. You can kind of get in and put a stop under 697, just under the low of this candle. So you're looking at a 30 to 35 cent risk, and see if we break out above this. And what that would do is it gives us two or three things. It's the same thing with, we call it multi-time frame alignment. And what does this do? This aligns on the daily chart, daily chart trend continuing higher, but also on the bigger time frames. Weekly chart downtrend, pushes higher low, breakout with continuation with that, as well as on the monthly chart, downtrend, reversing the trend. So when you want to reverse the trend, you guys are on the smaller time frames. But then are we switching into a monthly uptrend, weekly uptrend, and a daily uptrend? So we're having 3 time frames potentially switching in here, which can be powerful, because it comes with confluence. You know, some traders, swing traders watch the weekly, some watch the monthly, some watch the hourly, some watch the daily. And the more of those you can align on each other, that gets more people who maybe don't trade the time frame you trade, but you recognize that those time frames are also aligning, that gets a little bit more support at your back here. So I think we got a few things going for this. The narrative of retail traders becoming more involved in the market with active trading, and these are the two platforms they use. Hood has already broken out of its base and is trending. We got the daily, weekly, and monthly, all would be trend continuations. So those are the positives. The negatives is it's not a great market environment. I mean, it depends on your name. I don't know what this follows it. You know, these are technology. I mean, XLF actually is doing great. These kind of border, in my opinion, I guess, between technology and financials. So financials are trending up. NASDAQ is a little bit weaker technology, so a little bit of a mixed signal there. So it's not an A+ setup, but I do think it's good from those standpoints. Oh, and the third thing, maybe most important, is like I said, we have a really tight, 30-cent risk level, you can risk off of. And if you're wrong, 30-cent loss. If you're right, you get in a decent breakout that gets you a couple points on that, and that gives you a good risk-reward scenario on that. So you have a few things aligning that make me think that it's worth of a shot. And yeah, so that's kind of the swing trade idea for the day. But yeah, we'll leave it at that. You guys have a good rest of the trading day, and we'll see you tomorrow.